Hey guys, I'm going to show you the highly anticipated video of me day trading and scalping stocks. There will be no analysis of holding long term or overnight. This is just primarily what I do on a day-to-day basis when I scalp a stock. First, we need to look at one thing here. Um, we all know how stocks trend, and if you don't, then you need to do some more research. But this is a basic bull trend here. So what I'm going to tell you guys is even though this is bullish, this isn't as bullish as a pattern as we'd like in a day trade. If you see a chart doing this, it's risky to buy because it's already up, depending on what the range of this chart is. If it's this one in particular, it went from 824 to 970 already. So if it comes up back to 975, it has a chance of just double topping and failing that back down rather than continuing higher. So even though that is a bullish trend and you could buy it here, there is a better trend. For me, this is my favorite setup. This is something like this. This is a stock that goes back and forth for a while, and it gives you a clear cut channel. You have highs and lows, and you can see exactly what's going on. Once we have our channel outlined, we can basically just say, if this goes lower at 850, I'm going to go short, and I'm going to use the next support levels as my exit, and vice versa if it goes higher. So you can trade these in either direction, up or down. Some people are long bias, some people are short bias. I'm neither. I'll trade both ways. So let's look at PTBI. Previous day is what we want to look at. Gap up as the billionaire had bought in and insiders have buying in. Crazy volume. Gap up and run. So we know this has range. We know this has potential. What we're looking at is to see where it opens today, and as you can see, this has already been done. So it opened at just above $9. So it had a $3 gap up, which is pretty extensive. If you watch my gap strategy video, it's a little more than I would like as far as the gap strategy goes, but it's still a volatile stock, so we want to watch it so we can trade it in whatever direction it decides to go. So I didn't trade this stock in the morning. I didn't really start trading till like 10, so I'm just gonna wing it here, and I'm gonna show myself this chart as I'm showing you this chart, and I'll let you guys know what I see. So this is all the pre-morning trades. As you can see, you could have simply just put a top right there and said, as this double, triple top retests and breaks, I'm gonna get long, and you simply could have at $7 right there. So you could have bought first thing this morning. I typically don't like to do that, but it's an idea that's there and it would have worked. You can see just fine. So using my strategy, what I would have done is I usually wait 15, 20, 30 minutes after the market opens before I even trade. Today I waited like 2 hours because I was lazy. Um, so here's what we're looking at. You see the double top, triple top, quadruple top. We have a nice solid top. No doubt about that. And then you got a range of a bottom here. So we can clearly tell now that if this stock goes higher, we want to get long. If the stock goes lower, we want to get short. Being a high momentum stock, I would be long biased in this. A lot of insiders are buying, a lot of people are chasing this stock. It has potential to go higher, so keep that in mind. But just because it has potential to go higher doesn't mean it automatically will. We want to play the trend, we want to play the stock. We're going to let the stock dictate our actions. We're going to react to the market price. We're not going to try to predict the market price. So I'm going to have a buy trigger at 853. I'm going to give myself some cushion, so if it kind of just barely breaks above it and then it decides to pull back and then really breaks above it, that's when I want to buy. Also, what I'm watching is volume on the breakouts. A high volume breakout has more potential. So I got a buy trigger at, we'll say 853, 855, and I got a short trigger probably in the 786, 785 range, and we'll see what happens. So we'll just scroll over, watch this chart, see how this channel forms up, and it's respecting the channel, and then it breaks out. and it breaks out on high volume. See this volume increasing? If I would have saw this, I might have went long right here. You see my 13 EMA starting to curl up? That doesn't always indicate that it's gonna break out, but you know, being long by a stock, you could have went in small here around 825 and said, you know what, I'm gonna stop at 8 or 790, and I'm gonna risk $50 to $100 on my stop, but I'm gonna have a 20-cent profit margin before the stock even breaks out. So here's our breakout, 855. We're just gonna go ahead and say, our target trigger would have filled. We would have been in somewhere in that range. So we're just going to watch the stock. I'm going to continue watching my moving averages, and I'm going to continue watching these levels in here. What I want to see, a retest of this level is fine. What I don't want to see is a strong crash back through it. That gets a little scary, but as long as we see higher lows form, we're pretty safe. So we just keep watching, and you can kind of create more lines as you watch this if you really want to. So we know now that $9 is a range. If it starts to really move up, oh, there it goes. So I probably would have been out a little bit at 950, if not a full position. I would have took 1,000 shares around 850, and a full dollar move is pretty good. So I mean, I would have made $1,000 if I would have held a full position for a dollar. But this is by no means broken. You can draw a trend line straight up this chart. It hasn't broke the trend lines. It hasn't made any new lows. This is a new high, so we need to watch and make sure 975 breaks and that we don't see a higher low or a lower high here. And just keep the basics in mind. It's really simple. So we move over, and there it goes. It broke 975, and you could have even went long at 975 again if you got out here. So just keep that basic principle of finding the channels, finding the ranges, and buying the breakouts, watching the volume. High volume breakout and a continuation. So if you didn't sell already at 950, you're now up $2. So now this is when you really want to start watching for an exit. For me, I'm a pretty impatient trader. I probably would have already been out, but just assuming that I wasn't, I'd be watching this 13 EMA line, be watching this blue line, and I'd be watching my 50 SMA line. The blue one is the 20 SMA, just so you know. So I want to watch and make sure that this 1075 doesn't turn into a solid hard resistance. And I'm going to watch these 1020 levels to see if we start making new lows. So we move over, and there we go. I would have been out. I would have stopped out at 1025. That would have been, $1.50, $1.75. So $1.75 gain on 1,000 shares is plenty of money for me. If I would have made that trade, I would have been done for the day. I probably wouldn't have traded too much more that day. I do continue to watch the stocks in case there's a really strong setup. Something like this channel setup, this is what I'm talking about. These are the strong setups. Something that has clear-cut levels. You can't mistake it. You can't be like, it's kind of here, it's kind of here. No, it's exactly here. This is where we're buying. So it kind of chops up back and down. And this is about when I came in this morning. I started watching it here. And I even said in our chat room, if it breaks 1025, I would consider getting long. Here was the level. So it was actually 1035. Sorry, not 1025. 1035. I said I'd consider getting long for a retest of high of day. And it doesn't seem like that much on this chart, but that's 40 cents. If I have 1,000 shares and I go 40 cents, that's still $400. So I still have an opportunity to make money in this trade, even though I missed all of this. So we don't have a clear-cut channel yet, but I do know that this is a lower here, and this is where it pivoted from, and this is where it kind of broke out from, so I'm going to watch this for support. But I also want to just continue to see how it develops. And this is what I saw right here. I saw this volume come in, and I alerted the chat room. I said, volume's coming in, and I like this trend. you can see here that if you just draw these lines straight up, this is going to create an ascending triangle. This is what I want to see. And so I alerted the chat room. I said I would get long here at 10:38, and somebody was like, "Well, we wish you luck." And I I didn't buy here because they made me second guess it, and it pulled back, and then as it broke it again, that's when I bought. So we'll see what happens. I was just following my trend line, and there it goes. And it ran right up to 11, and that's where I got out. So I still made 70 cents on this trade, which is $700. And I made that in this short amount of time. Each one of these candles is 1 minute. So in the matter of 10 minutes, I made $700. That is as easy as scalping can be. So I like to clear my trend lines. I don't like to have them in the way anymore. I just want to see what's going to happen. And I actually went short here at $11. This was just a complete speculative play. I had no channels, no nothing. I was just like, this chart is going to be getting really heavy soon. There's no way that this continues to run. So I got short at 11, and I sold like right here at 1058, 1060. Still a 40-cent gain, like I said. That's plenty. That's no big deal. But I was really impatient with it. It never went back to 11. It never retested 11. It never even made a new high. It never even tried to make a higher low. It just completely crashed. I could have made a lot more on this trade. As you can see, it just kind of channels here, and then it kind of just begins to fade all day until, you know, the late afternoon pops. But the stock is getting really heavy now. It still has potential to run on these dips, but it's definitely weakening. But just because it's weak doesn't mean it can't go up. The volume on this stock is crazy. In a matter of minutes, it can run 50 cents. So highly volatile, highly dangerous to play because of its volatile. So you have to be quick and you have to be decisive. So we don't want to predict our moves. We want to just react to the chart. So back here, you know, I wasn't predicting that it was going to break out until I saw this volume come in. All I was doing was reacting to the breakout. And so that's all you really have to do is just react and be ready to react. GPRO today. So after its earnings, it gapped up and it's just been in a steady downtrend. I like to buy and get a little bit long when it starts testing these moving averages. Not completely 100% long bias, but I'm looking for bounces and strong bounces. So we get this weak market open. It begins to form lower highs, lower lows, so we know it's going to go into a downtrend. You could short the pops on these. You know, that's pretty basic, but I'm still just looking for my setups. So once again, it hits bottom and it begins to form higher lows. So you can get long on these dips. Just follow the trend lines, follow the 13 EMA and the 20 SMA. Those are the ones that I like to follow. But I just kept watching. Didn't really care for this pattern. It would have been a great winner if you did, but not my style of setup, so I wasn't going to trade it. So just keep moving over, and then I start to see this. This looks a little better to me. This is starting to shape up into something that I would trade. Nothing confirmed yet. I want to keep an eye on it though, so we'll just keep watching. And here it gets a little more interesting. We start to see the curl up, the test of the line. So we want to get long in this range here at the tops of these candles, probably 47.62 if it tests those, and we'll see what happens. It pulls back, and this is where it breaks out. We would have got long here. Never breaks the 13 EMA. It just kind of comes down, retests, and then it shoots up. People asking where my targets would be. It's hard to say on this one. 4780 is not a terrible target here. As you can see, it kind of hesitated on the way down right there. So that is definitely going to be a line of resistance. But I would look for a little bit bigger move on this play just because it is in a pretty good uptrend so far from the bottom. I would look for continuation. But that being said, if you're up already 20, 30 cents, there's nothing wrong with taking profits on the way up. You could take a quarter position here or a half position here and just protect your profits. That way if it does pull back and you get out for even here, you've already made, maybe half or a quarter of your position in profit. It'll cover your commission, or it might even give you some pocket change. And there it goes. It breaks the 80 mark, pulls back, retests it, and then comes up here to about $48. Me being an impatient trader, I probably would have been out before it even got close to 48. Well, I probably would have just sold as it broke out this, as I do like to buy, or not buy, I do like to close out of my position as momentum is coming in, so that way I'm not competing for all these people selling right here. I'd rather be out up here than down here. So you guys will see me say, oh, my target price is 48, but then my alert will come out and I sold for 47.96 or 47.98. That's because I'm selling before it even hits that resistance level. I'm not competing with these other people. Alright, so if we want to analyze this trade a little bit, if I would have sold, there's no reason that you couldn't hold on though. Even at this test level here, this is still a higher low from the previous pivots. So as a day trade, if you're not scalping this stock, you can still be long biased this stock. If you draw your trend lines, I'm sure you'll see that we are still following the trend. It retests the under over level here. It's just a couple cents. I wouldn't be too worried about that. I don't use super hard stops on these stocks. As a new trader, you might want to, just so that you don't get caught. But I've done this enough that I'm pretty lenient with my stops. So we'll see if we get any higher here, and sure enough, get a new high and another little base starting. So you could have sold up here on its way up and took more profits. This is about when I definitely want to be out if I wasn't out already. And then you can just watch this trend line and see what happens as it begins to slowly fade. But that doesn't mean it won't set up again. We can continue to watch for our channel setups. Like I said previously, I like to delete my lines and then start over as I take new positions. This isn't a terrible line here, so if that broke, new high of day, we could get long again. As you can see, it never really does. This runs into the close and it stops right here. So this is Twitter here. This is kind of the same story. This one's been beaten up. It had poor earnings. Opened up really weak with the indexes. That's another thing that I will show you guys is you kind of want to keep an eye on. I keep an eye on the SPY, but depending on what stocks you're trading, you want to keep an eye on the indexes to see what the index is doing. If the index is running up, you can be bullish a little bit more than is if it's running down and being bearish. So kind of trade with the index and keep that in mind. If the index is running up, you can probably say it's safe to be a little bit more aggressive with your longs. And if the index is being bearish, you can be a little more aggressive with your shorts. So Twitter was kind of strange today as well. Nothing clear cut here. You could have done something like this though and bought when it broke this channel. It has a lot of risk because of the range that it's in. It's 30 cents. So I would have took a small, probably 200 or 300 share position. That way 30 cents is only $60 to $100. That's the most usually I will risk in a day trader's scalp. I'm not risking more than $100. So that being said, if you would have took this at 36.90, 200 shares, you want to look for, a pretty decent gain. 50 cents would be $100. So keep that in mind. Even a 40-cent gain, 30-cent gain would be fairly significant for a quick scalp. So keep in mind your position size and as well your risk. So this one really ran up to 37.30, before it even decided to try to break down. It has a few pullbacks here, but never really created any new lows. It was just pulling back and retesting the same support levels. Pretty choppy chart though today, not something I would have particularly got long on. I was just showing you that trade idea just in case you guys wanted to see it. So even though I said I wouldn't take that trade particularly, I went back and looked in the chat, and I actually did take this trade at $37. I got filled, so I chased it a little bit. Let's see what I got exited at. Yeah, I said I was looking for a 20-cent gain, and of course I eventually got it from 37 to 37.20. It took some patience, but it got there. Could have held out for quite a bit more, but Twitter, like I said, really wasn't my chart today, not my style. This line right here isn't terrible. You could have done something like this as well. That would have been more my style, but um, watching this level here and then the breakout, that's what something I would have looked for, or maybe even that level there. But like I said, Twitter really wasn't feeling hot to me today. I didn't really trade it much. I was more interested in PTBI and GoPro. So I'll definitely be making more videos like this. If you guys have any more questions, feel free to contact me, email me, whatever you need to do. I will fill them in the next video. But yeah, this is how I trade stocks on a day-to-day basis. And on days like today, you could have made, over $1,000. Typically, in any given day, I can make $300 to $500, and then you get your occasionally really good days for over 1,000. So, and that all depends on position size. Don't shoot for a projected profit target right away when you're first starting to trade. Just shoot for consistency. If you can consistently make a little bit of money here and there, then you're learning. It's better than trying to figure out something that is not working and trying to develop a non-winning strategy. If you can't consistently make good trades on a small position size, there's no reason why to increase your position size, because you're going to just continue to make those same mistakes. You're going to take bigger losses because you have an increased position size. So keep your sizes small. Don't look for huge winners right away. Just look for consistent wins. And then as the consistency develops and your discipline develops, and you can begin to see the same chart setups that I'm seeing, then that's when you can increase your position size and begin to increase your stakes. Like I said, I highly advise you watch some of the other videos, watch the basics, learn the fundamentals of the charts before you start day trading. Definitely practice these, do some paper trades. This strategy isn't for everyone. You have to be pretty quick, or you have to use limit orders, and that's exactly what I do. I have my limit orders placed before the stock even breaks out. And then if I can define my projected profit targets, I have those levels set in place and those orders set in place before the targets even are reached. So my orders basically execute automatically, and my exits execute automatically as well. And I'm not competing with people, as like I said, I exit before the resistance. So keep that in mind. Learn to use your limit orders. Learn to when to get out of a stock. Learn to see when the stocks are reversing. Learn all the basics, and then try to day trade.